See, primarily we have accounted for all the expenses for all the businesses in this quarter. And what you will see is that, okay, in future quarters, like as you saw that, okay, we are able to now able to sell our kind of like loan products and all that. So slowly we'll see lots of revenue coming from that vertical where already we have accounted for expenses. But there is one factor of expenses which is very important for you to keep in mind. Acquisition of client. If we get an opportunity to acquire more customer, given that we are entering like in 2 quarters IPL and all that, if you see that opportunity, always as I say, it is an upfronting cost where revenue is going to follow for next 5-6 years. So we would not shy away from taking more expenses if we get an opportunity to acquire more customer and get a better market share.
Understood, sir. Very clear. Thank you so much for the responses and all the best.
Thank you.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Hi, sir. Congrats on the numbers. Just, on the new businesses, so we've disbursed around 3.6 billion in terms of loans, distributed rather. So, what is the kind of realization that we're getting, and what is the kind of aspiration of this segment to be, say, in the next 1 year or so? That would be my first question.
Sure. We are very bullish on all these new businesses because, as you said, that we migrated from broking app to super app. Reason was that we want to be leader in all kinds of like distribution business, be it loan product, be it insurance, be it anything that a retail customer wants. So we have very high aspiration in terms of being leader in that segment. On numbers and everything, I'll ask Saurabh to answer this.
Hi. In terms of the take rate, I think we are at par or slightly better than market standards right now in the distribution business, and more and more details of the business will get out once we ramp up the business over the next few quarters.
Okay. And where are we in terms of wealth management with regards to products, RM addition, and so where are we in terms of wealth management?
Is Shobhit there on the line?
I'm there. I'll take that.
Yeah, please you can take.
Yeah. So there are a combination of things that we have done. As Dinesh mentioned, this is more a combination of very strong domain expertise and bringing technology together to deliver that and add efficiency. We've already started to do 2 sets of activities. First one being that we have already started to publish content, which is across 3 different categories of content, which you will see in the investor relation presentation as well, across macro views on asset classes, across views on overall macroeconomy, and specific news on events which happen. So those things have started, and separately we've already initiated third-party distribution business where a combination of mutual funds, PMSs, AIS have already started to get offered to customers.
Okay. So where are we in terms of RM count, and what are the addition plans there?
So the relationship team is getting hired, combination of people, some people on board, some people joining us over the next few months, serving their notices. The RM team is under the ramp-up stage right now. I think the full-fledged team should be built out over the next month or so. So you will see the full build-out of the RM team in the next quarter.
Got that. Sir, and on the assisted partners business, what is the kind of AP network that we have today, and how many have we added in the last 6 months? Also, the mutual fund business is mentioned to be scaling up from that element. So will the distribution revenue start growing from that channel as well, and what kind of potential we see there?
See, AP business, we are very bullish on AP business, and that's the reason we have brought in a big team and big changes. In AP business, we believe that not only we would be looking at distribution or getting revenue from broking, but also distribution of mutual fund, insurance, and all that. For further detail, let me get in Nishant over here, if at all he's online. I think there was some disconnection. Okay, so Nishant is disconnected. Let me take this. So in terms of number of APs, we are in the region of around 9,000 to 10,000, and this business is also growing as equal to our digital business. So share of AP business is around 22 to 23% of our revenue. But we feel that this also business will be able to keep pace with this growth in digital business.
And last question on the burn rate of these new businesses, what should we think, and when do we see real contribution from these businesses, say from FY26 or FY27? How do we see the burn rates in these businesses and going ahead?
For new business distribution of loans and all that, already we are in traction in terms of getting revenue from that. And in few quarters, we will start distribution of insurance on our platform. So this new business is where we have been invested like for 18 months. Already they have started giving revenue. And on wealth side, I feel it is a matter of like a few quarters that will start giving good revenues. So as previous earning call, we guided everyone that is burn rate would be around 2 to 2.5% of our total revenue. So that way we maintain that because we want to grow all that vertical. So we believe that break even for new businesses would be in next 1.5 to 2 years, and maybe wealth may take around 2.5 to 3 years.
Got it. Thank you so much, sir. All the best.
The person you are speaking with has put your call on hold. Please stay on the line.
ನೀವು ಮಾತನಾಡುತ್ತಿರುವ ವ್ಯಕ್ತಿಯು ನಿಮ್ಮ ಕರೆಯನ್ನು ಹೋಲ್ಡ್ನಲ್ಲಿ ಇಟ್ಟಿದ್ದಾರೆ. ದಯವಿಟ್ಟು ಲೈನ್ನಲ್ಲಿಯೇ ಇರಿ.
आप जिस व्यक्ति से बात
Speakers, please go ahead.
Hello?
Yeah.
I'm done with my questions. Thank you so much.
Thank you.
All right. Next question comes from the line of Swechha Jain with Whitestone Financial Advisor. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, I have two questions. One was on the lending distribution that we have started. Just wanted to understand what would be our revenue model there. Are we getting some one-time kind of a fee for distributing these loans? Or it will be like, how do we make, what would be the income out of that? What is the revenue model basically for us there? And second thing on the NBFC lending, what happens if a loan defaults? So will those loans that we are distributing, will it count as an NPA for us, or the credit risk belongs to the banks or the NBFCs, through which we are tying up for distribution? So this was the first question. So answer this and I'll ask the second one. Thanks.
No, maybe not second. So let us take all the questions and then we'll answer one.
So second was on the transaction, standardization of the transaction. I think you did mention some bit of it in the opening remark, but I kind of joined little late, so I missed that commentary. So just wanted to understand, how do we plan to, negate that impact? Because I think it will be an impact of 410 crores on an annual basis. So how do we kind of, take care of that impact of the transaction cost?
Okay. So impact of transaction you are talking about transaction cost, that is true to labor, right?
The transaction charges, which now, we were charging, we used to charge slab-wise to our customers.
So we have increased our or maybe we have started charging for cash delivery transactions. We have put, we are charging interest on collateral that we receive for, so that way, by putting all these additional charges on cash segment and charging for collateral that we receive as a margin, we would be able to negate this impact of true to label. Second comes change in F&O contract size and rationalization of weekly expiries and all that, one contract per exchange. So we feel that impact would be around in the region of 13 to 14% of the total income from the client. And we are seeing that customer base is growing at a rate of 50-60%. So we will like to see the impact on overall behavior of customers. Then we'll take a call whether some action has to be taken on price side, or is there any other levers that we can use to negate that impact. Too early to talk about that impact.